In the time it takes you to watch this video, the United States national debt will jump by tens of millions of dollars. As of early 2026, the debt has blown past a staggering $38.5 trillion. That isn't some far-off government problem. It's a quiet tax on your savings, your retirement, and your family's future. The cash in your bank is being systematically drained of its value, and holding it has become a guaranteed way to lose. You can probably feel it, can't you? Your paycheck doesn't stretch as far, buying a home feels like a fantasy, and the finish line for a decent retirement keeps getting pushed back. But most people don't know why. In this video, I'm going to connect the dots and show you exactly why your dollars are dying. And more importantly, I'll explain why Bitcoin's predictable, mathematical code might be the only real cure to protect your wealth in 2026 and beyond. Let's just call it what it is. Your savings account is a melting ice cube. Even if the number of dollars in it goes up, what you can actually buy with those dollars is going down. This isn't an accident. It's the result of a 1-2 punch, rock-bottom interest rates, and a national debt that's gone completely off the rails. For years, the advice was simple. Put your money in a savings account. The bank would pay you interest, and hopefully it would beat inflation. Well, that game is over. In today's economy, even as the Federal Reserve has cut interest rates to the 3.5% to 3.75% range to manage the growing debt burden, your high-yield savings account is barely treading water. After you factor in taxes and the real cost of living, you are losing purchasing power every single day. This is a classic case of what economists call financial repression. It's a slick way for a country to handle a mountain of debt. By keeping interest rates artificially low, the government makes its own debt payments cheaper. But here's the catch: it punishes savers. It forces you, the responsible person trying to build a future, to prop up the whole system. You're playing a game that's rigged from the start, where your cash is engineered to lose value. So why is this happening? You have to understand what our money actually is. The US dollar, like every other major currency, is fiat money. That's just a Latin word for by decree. It means our money has value simply because the government says it does. It's not backed by gold or any hard asset. It's backed by trust. And right now, that government is over $38.5 trillion in debt. Let that number sink in. It's so big, it's almost an illusion. Over the last year, the debt grew by an average of $6.12 billion per day. This isn't sustainable. When a government spends way more than it brings in, it has two choices: default on its debts, which would trigger a global economic meltdown, or just create more money out of thin air to pay the bills. Which one do you think they always choose? This is called currency debasement. Picture a pitcher of orange juice. That's the money supply. Now, to serve more people without getting more oranges, you just add water. The pitcher is still full, but every glass is less valuable. That's exactly what happens when a central bank prints money. It waters down the value of every single dollar already out there, including yours. This isn't a wild theory, it's just math. The more dollars they create, the less each one can buy. It's an invisible tax that punishes savers and rewards those in debt. And because of the ever-growing mountain of debt, this debasement has to accelerate. Interest payments are now the fastest-growing part of the federal budget, costing over $1 trillion a year. This creates a terrifying feedback loop. The government has to borrow more money just to pay the interest on the money it already borrowed. Your dollars aren't just sick, they have a terminal diagnosis. If holding cash is a losing game, where are you supposed to put your wealth? How do you get off this treadmill? This is where you need to stop thinking about Bitcoin as magic internet money and start seeing it for what it is: one of the most powerful stores of value ever invented. The core problem with the dollar is its supply is infinite. The solution, then, has to be a form of money with a supply that is finite, predictable, and can't be changed. That's Bitcoin. There will only ever be 21 million Bitcoin, period. That number isn't a suggestion, it's an unbreakable law written into its code and enforced by a global, decentralized network. No politician can decide to create more. No central bank can water it down. Its supply is transparent and absolutely scarce. This is the cure. While the total number of dollars is always going up, Bitcoin's denominator is fixed forever. This unique feature is becoming critical in 2026. We're now past the 2024 halving, an event programmed into Bitcoin that automatically cuts the creation of new coins in half every 4 years. This means the new supply of Bitcoin hitting the market is tighter than it's ever been. At the exact same time, demand from the world's biggest financial players is exploding. The approval of Bitcoin ETFs has opened the floodgates for mainstream investment. Some analysts are now forecasting that in 2026, demand from these ETFs could absorb more than 100% of the newly mined Bitcoin supply. Think about that for a second. When soaring demand crashes into a fixed and shrinking supply, the price really only has one direction to go in the long run. This is why you hear analysts talking about significant price increases as the world slowly wakes up to Bitcoin's fundamental purpose.
Now, let's be crystal clear. Bitcoin is not a get-rich-quick scheme. It is a volatile asset. In 2025, it hit a peak of over $126,000 before dropping. It can have brutal corrections and often moves like a high-growth tech stock, not a traditional safe haven like gold. But understanding that volatility is the key to using Bitcoin the right way. The answer isn't to take your dying dollars and dump them all into Bitcoin tomorrow. The answer is to use Bitcoin as the financial shield it was designed to be. For a smart investor in 2026, the strategy is to see Bitcoin as your insurance policy against the slow-motion collapse of the traditional financial system. You don't buy fire insurance because you want your house to burn down. You buy it to protect yourself from a catastrophe you see coming. So what does that actually look like? The most common sense approach is to allocate a small, considered portion of your portfolio to Bitcoin, maybe in the 5 to 10% range, an amount you can afford to lose, an amount that if it went to zero wouldn't ruin you. But if it performs the way its fundamentals suggest it should in a world of out-of-control money printing, it could be the single most important decision you make to protect and grow your wealth. You're essentially making a small, calculated bet. You're betting that a decentralized, fixed-supply asset will, over time, beat an inflationary, centralized one that is programmed to fail. You are trading a melting ice cube for a piece of digital property that no one can ever make more of. If this is all starting to click and you want to keep learning how to protect yourself in this crazy financial environment, do yourself a favor and subscribe to the channel for more deep dives just like this one. I also have a free weekly newsletter where I share my personal thoughts on the most important news in this space. The link is right at the top of the description. We started with the hard truth. Your dollars are being devalued by a system drowning in low interest rates and unsustainable debt. Then we looked at the horrifying speed of that debt, which forces central banks to print more money and water down your savings. And finally, we found a rational solution: Bitcoin, an asset with an unchangeable supply of 21 million, standing in stark contrast to the infinite supply of government money. It's a strategic exit, a way to shield a part of your wealth from the guaranteed loss of holding cash. The financial rules our parents lived by are broken. In 2026, playing it safe is the riskiest move you can make. The question is no longer, is Bitcoin too risky? The real question is, in a world where governments can print money into oblivion, is it too risky not to own some? So make sure to subscribe to stay updated, but above all, to understand why we need to become masters of our own destiny right now. I'll leave you with one final thought to debate in the comments. What percentage of your wealth are you willing to bet on the long-term stability of the current financial system? Think about it.